Peace and grace, man. What's going on, y'all? It's Vision Prone checking in with y'all again one more time. And I remember the last time that we talked, probably like a week or so ago, we was talking about how I had the task of buying companies or businesses. And I was having fun with that for the past week and some change, and just watching the fluctuation of the market and the businesses rise and fall, news come out, different things of that nature, FOMC meeting, the CPI data, whole bunch of stock market related type of stuff. On this channel, I'm going to speak a lot about investing and things of that nature because once again, like I said before, if you watch my videos, this is Vision Prone. So I'm going to speak about whatever interests me and things that are on my mind. And hopefully through you're watching the different videos that I put out, you can learn something. If you have a like mind, then these different things could be beneficial to you. So I was copping businesses or whatever last week and this week and today, all in the stock market, doing my thing and everything. And I guess you could say I'm a novice trader or investor, whatever the case may be. I'm still learning a lot. There's still a lot for me to learn. So I want to share with y'all some of the things that I've learned on a journey, or that I am learning. As I learn, I want to add value to you by giving you some of the game that I have. And since we talked about purchasing stocks on the last video, this video I'm going to tell you how to buy stock strategically. We're going to talk about how to buy stocks strategically. There is a strategy to buying stocks. Once you've done your research and everything, did your homework and figured out what company you want to invest in, what's going to be important after that is deciding how much you want to invest. So let's say I have $500 that I want to invest. Just using this as an example. Anything I say in this example is not something that I'm actually doing. You know what I'm saying? So I say 100 out of that 500, I'm going to put into Tesla. You know what I'm saying? It's not going to be wise for me to take that 100 today, right now. If that's what I decided, I got 500, I'm spending 100 on Tesla. It's not going to be wise for me to put that whole 100 in Tesla at one time on today. And why do I say that? I say that because as soon as I invest in Tesla today and I spend that 100 on it, today Tesla could drop $5, $10, you know what I mean? Whatever the case may be, the stock can drop. And then immediately, as soon as you're trying to build up your portfolio and you want to see, you know, all your gains and make money and things like that, the first thing you're going to have to look at on your account is that you're in a negative. Now, the wiser way to do this would be to take $20. Let's break it down into 5 increments. You can make it 4, whatever the case may be, and make it 25. I'm going to say 5. You know what I mean? Break it into 5. What's that? $20 out of 100. 20 times 5 is 100. So you got 5 20s. You want to buy a Tesla with all of these 20s. You buy a 20 now, you know what I'm saying? And then maybe tomorrow you see if the price maybe drops some, you know what I'm saying? And then boom, let me spend another 20. The next day, see how the market is fluctuating, and kind of like spend those 20s in increments until you get to that 100. Then you will have a better chance of having an average cost of Tesla that is lower than that first day that you was going to put that whole 100 down. That's buying strategically or buying wisely in the stock market. You know what I'm saying? That will save you some money. And, you know, I'm not trying to sound like I'm, you know, super knowledgeable, but that is important right there. You know what I'm saying? So when y'all out here in the market and y'all going to cop stocks and things like that, just make sure that you're buying them strategically. You're not putting all your money in at one time. Now, there is one situation where something like that will work. And that would be if for some reason you're putting your whole 100 down and the stock for some reason is at its 52-week low. That means it's the lowest it's been in a year. Then something like that may be beneficial to go ahead and drop the whole 100. You know what I'm saying? But overall, those situations don't happen all the time where stocks are just sitting at their 52-week low. So, you know, you just jump in and just cop like that. So, you know what I'm saying? We want to make sure that we're what they would call dollar cost averaging into the stocks. You know what I'm saying? Dollar cost average into that. Take your time. You know what I'm saying? And y'all don't be scared out here to invest, because, you know what I'm saying, you are responsible for building your future. You know what I'm saying? And that's, if you have kids and different things like that, people that are depending on you, then you have to figure out some type of way to make their life in the future better. Let's say that. Put them in a better position that you were in. That's my goal and that's my journey. And I appreciate everybody that's checking this out right now. Everybody that's up to the channel. You know what I'm saying? I want y'all to walk with me on this journey. And if y'all have any questions or y'all got anything y'all want to add, y'all own, the comment section is down there below. I want y'all to get up in there and let me know how y'all feel and what y'all got going on, man. It's Vision Prone and I'm checking out. Peace and grace, y'all. Salute.
See, the goal is to establish kingdom identity, right? Because everybody's already out here trying to put something out in the atmosphere that's already out there.